A huge warning from legendary hedge fund manager Michael Burry. I have all the details and his latest calls right here in the video, so let's get right into it. All right, Michael Burry was recently out in another set of warnings for the United States economy and the stock market. Now, his warnings are actually coming off of a new report that was recently released showing that consumers right here in the United States added an additional $40 billion of consumer debt just in the month of June. Meanwhile, analysts and experts were actually anticipating consumer debt to increase by only $27 billion. We exceeded it by $13 billion. I'm not really sure if that's something we should be proud of, but that is the fact of the matter, and this is a new report that was recently released. Now, this is also showing another report that was released just a couple weeks ago, showing that in the second quarter of 2022, credit card debt in the United States alone across all consumers has reached $890 billion, just a little bit shy of $900 billion. Meanwhile, overall in the United States as a whole, all debt across all consumers is over $16 trillion now. So Michael Burry is showing that all of this consumer debt right now is going to come home to roost and is going to have a major headwind for the United States economy going forward. Now, he also went on to indicate the stock market and the current rally that we're going through right now has achieved a 23% bear market rally. And he was saying, congratulations, we have now achieved a 23% bear market rally, which, by the way, he is saying is the average bear market rally since 1929. The average is 23%, and apparently we have just achieved the 23% average. Therefore, usually bear market rallies, like I've said so many times in previous videos, are big, they're ferocious, they come right in, they rip higher, and a lot of people that were short get scared out, they cover their shorts, usually at the top, and then all of a sudden the next leg in the market comes in, and the bottom gets pulled out from under this thing, and the thing crashes and burns really fast and really aggressively. So maybe this is a bear market rally, or maybe this is just the turnout of another new bull market in this market right now. But again, we'll have to continue watching that to see what actually happens here going forward. However, a lot of this going forward right now, in conjunction with all of this consumer debt and consumer spending, is also going to be indicated by the Federal Reserve and what they're doing with their interest rate policy. Because you better believe that the Federal Reserve is probably watching consumer debt just as closely as Michael Burry and the rest of us as well. Now, here's the thing. Borrowing money has to come to a stop, or at least slow down at some point. Now, again, I'm not here to say that you should stop spending money. I'm not saying that you should stop using your credit cards. I'm definitely not saying that you should cut up your credit cards, and I'm certainly not saying that you should stop buying cars, buying houses, all kinds of different things. By all means, buy whatever you need to, whatever you see fit for your situation. However, the Federal Reserve is doing their best right now to come in and actually slow down some of this consumer spending right now by raising interest rates very aggressively. As we've been seeing here over their last few meetings, they've been raising interest rates by 75 basis points per meeting. Now, that is very aggressive policy. As I mentioned in previous videos, the last time that they raised interest rates at 75 basis points like this was way back in 1994, 28 years ago. The old 90s. Remember the 90s? Oh yeah, Zuba pants and all, right? I think that was the 90s. I'm not really sure. All that I know is I had a whole stack of those things, right? Because who didn't, right? Anyway, just a little reminiscent time here talking about the 90s, the good old 90s. Zubas and mullets, right? At least I did. I'm not sure about you, but yeah, anyway, let's keep moving on here before I embarrass myself too much, right? All right, anyway. Oh, I forgot bowl cuts. Remember a bowl cut? Oh, yeah, those were the 90s too, I'm pretty sure. Anyway, let's keep rolling here. So, all the way back to the 90s was the last time that we saw 75 basis point rate hikes. Well, the whole deal behind this is that the Federal Reserve is trying to step up right now, trying to disincentivize people from borrowing money and spending more money right now as a result of going out and buying new cars, auto loans, maybe applying for and getting new mortgages, all kinds of debt that we are accumulating on credit cards, personal loans, lines of credit. I mean, all kinds of different loans that we are setting up right now and new debt that many people are taking out. So by the Federal Reserve coming in and aggressively raising interest rates, they're trying to basically tell people, in kind of a passive-aggressive way of, hey, stop spending money. That's basically what the Federal Reserve is doing, because they're trying to make it less appealing for all of us to borrow money. Because if interest rates were like at the beginning of this year, for example, on a 30-year fixed rate mortgage, 3% or even sub 3% on a 30-year fixed rate mortgage earlier this year, and now all of a sudden they are coming up and interest rates are sitting at, say, 5.25%, 5.5%, pushing even 5.5% right now. And many people are thinking, why would I buy a place now when I could have locked in a 30-year fixed rate earlier this year for, say, 3%, and now they want me to pay nearly double that at, say, 5.25%, 5.5%, nearly 6% in some instances sometimes, and rates will likely go higher. Same thing goes with a new auto loan or personal loans or lines of credit that, again, have adjustable rates on them. So, and all these credit cards as well. Again, about 19.5%, 20%, 23%. Again, do we want to go out and borrow a bunch of money on our credit cards or spend money on credit cards? Unfortunately, that's the case that many people need to do right now because many people simply don't have the money to cover all the bills and the necessities that they need. Again, a lot of people are floating balances on credit cards. In fact, I just read a report the other day that showed credit card openings, as in new people applying for new credit on credit cards, it has spiked significantly in the second quarter of 2022. So interesting that right now, as people simply don't have the money because inflation is raging on right now, people are opening up new lines of credit, as in credit cards, applying for new credit, all kinds of things like this, because that's just what people need right now, right? A way to get by and kind of float balances on credit cards. So basically what this all coming down to is Michael Burry is looking at all this saying, this cannot go on. The party cannot go on, right? Like musical chairs. The music must stop someday. And all of a sudden, we're going to all look around and say, wait, where are the chairs? I thought we were supposed to be playing this game where we sit down on a chair. Wait, the chairs have evaporated. The chairs are gone. Who threw them into the bonfire? What happened to the chairs, right? So the chairs are over there smoking away and the chairs are up in flames. Meanwhile, we're all dancing around trying to find something to sit on, right? And the music stopped. Not a good picture. So Michael Burry is essentially laying it all out saying this is not a good situation. All of this consumer debt is on a trajectory right now that is not sustainable. It is not a pretty picture, and this is ultimately going to be some major headwinds for the United States economy going forward, and ultimately the stock market as well, right? So one more thing that I want to point out as well is keep an eye on the stock market going forward. I've been kind of banging this drum for quite a few weeks now. I've been saying that this is likely a bear market rally. In fact, I've come back in some other dedicated videos talking about this. This market or this rally that we're seeing right now is very characteristic of a bear market rally. The market did not even go down that much to really have it a major bear market or even a major correction. Yes, it went down 20%, nearly 30% for the NASDAQ, but at the end of the day, for a real bear market, I mean, obviously, yes, it was a real bear market, but the fact of the matter is, for this to be a really major correction, it needs to be pretty much more significant than what it has been, right? So I've been saying this for a while now, and again, I could be 100% completely wrong, but I've been banging this drum for a long time now, quite a few weeks I've been saying, this is likely just a bear market rally. It's likely going to be the topping out or the opportunity to either exit your longs and or enter into shorts and get into the next major leg lower. And again, I could be completely wrong. This thing could continue to rage on and go much higher, and it could be the start of a new bull market. Or it could be the topping out of the next bull market rally, or sorry, the bear market rally, and then ultimately the rug gets pulled out from under it, and we ultimately go back down to the lows that were put in June, and possibly even break those lows. If we break out the lows, guess what? Look out below, because this thing is going to go significantly lower. And again, that's kind of what Michael Burry is also suggesting here as well is, hey, congratulations, we've achieved the average bear market rally of 23%, and therefore, look out is basically what he's trying to say in so many words. So again, only time will tell on so much of this. We'll have to continue watching everything closely. As I've mentioned before, all of this is so slow moving, right? It's like a huge freighter out on the ocean, right? The thing is cruising along at however fast those things move. Honestly, I don't really know. I've never looked into it, but it's like a huge freighter out on the ocean, right? Cruising along, and all of a sudden the thing wants to make a U-turn. Does it all of a sudden just slam on the brakes and make a U-turn like a motorcycle? No, it doesn't, right? It slows down over long periods of time, and then it takes a long time to turn that sucker around and get it going in the opposite direction. But once it gets going in the other direction, the momentum builds and it starts building up speed yet again. Same thing happens with all this stuff. Consumer debt, the stock market, inflation, the Federal Reserve. I mean, seriously, all of this stuff is basically the same analogy, right? So anyway, only time will tell, but we'll have to see. Will this tide turn, or will it continue on in the same trajectory? And at what point is things, finally going to hit the fan? So anyway, I'll keep you posted, but Michael Burry yet again out with another set of warnings on the United States economy, consumer debt, and of course, this market that we're currently living through. Either way, I'll continue watching everything closely, as I'm watching all this stuff very, very closely every single day. I'm watching it for me, my personal life, and of course, I'm watching it right here for the community, because I want to know what's going on. I want to know how all this stuff that's happening right now is going to impact me personally, and of course, I want to know what it's going to do to everybody here in the community as well. That's why I make these short videos. I bring them to you in this on this channel right here, so you can stay updated with what is actually happening and how it's going to impact you, your money, your benefits, your lifestyle, your bank account, your wallet, everything else like this going forward. It's all very important to understand. Anyway, hope this video helps you out. And again, the next set of warnings out of Michael Burry. Anyway, enjoy your day. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands and thousands of videos here on the channel. Until next time, have a good one, and I'll catch you again later in the next video.